So these are the questions from chapter number 2 of customs. ICAI study material questions. Look into this. Number 1, with reference to section 9AA of Customs Act, state briefly the provisions of refund of anti-dumping duty. That is, whenever we pay this anti-dumping duty, so in excess, so because there is a provisional anti-dumping duty, so under provisional anti-dumping duty, when we pay excess amount, we will be able to get the refund. Okay. So therefore, it is subject to the provisions of unjust enrichment. What does it mean? Which means that we should, for example, we paid 20% as anti-dumping duty and we recovered that from our next person. Now the provisional is 20, but the actual is only 12, so that 8% we will not get as a refund if we recovered that money from the other person. That is known as a refund subject to unjust enrichment. So refund of excess anti-dumping duty paid is subject to provisions of unjust enrichment. Okay. So then suppose a person has paid any anti-dumping duty on any article in excess of the actual margin of dumping, he shall be entitled to refund of such excess duty. Okay. So then the next question, with reference to section 9A subsection 1A, mention the ways that constitute circumvention of anti-dumping duty imposed on article which may warrant action by the central government. When it is called a circumvention of anti-dumping duty, if we alter the name or description, or if we are importing it in unassembled or disassembled form, or if we change the country of origin, or in any other way when we try to circumvent the anti-dumping duty, the central government may extend the notification of anti-dumping duty even for such article for which we change the description or we change the country of origin or imported in unassembled or disassembled form. So you have altered the description or name, or in unassembled or disassembled, or changing the country of origin, or in any other manner, then central government, okay, so what they can do? So they can investigate and ensure that the anti-dumping duty are levied on these articles also. Okay. That is about this. Then question number 3. When shall the safeguard measures under 8B be not imposed? Not imposed. Okay, discuss briefly. Total 5 situations. Number 1, if the goods are imported by a 100% EOU or unit in SEZ. Okay, and suppose if they import it to EOU or SEZ and clear it to DTA, then there will be safeguard duty. But import by 100% EOU or SEZ, no safeguard duty. And specifically if it is mentioned in the notification itself that the safeguard duty is not applicable, then also there is no safeguard duty. Then import from a developing country does not exceed 3% of the total import of that article into India, or imports from more than one developing country. So when this 3% will be applicable, import from a developing country, only one developing country. If we are importing from more than one developing country and imports from developing country with less than 3%, less than 3%, less than 3% taken together does not exceed 9%. So then also there is no safeguard duty. Okay. Then question number 4. What are the conditions required to be fulfilled by importer to make the imported goods eligible for preferential rate of duty prescribed by the central government by notification under section 25? There are 2 types of customs duties in basic customs duty: standard rate of customs duty and preferential rate of customs duty. Whenever we are importing goods from the countries with which India is having trade agreements, then the preferential rate of duty will be applicable. But for that the condition should be fulfilled. Number 1, the importer at the time of importation should make a specific claim for the preferential rates, and he should also claim that the goods are produced or manufactured in such preferential area, and that area has been notified under the Customs Tariff Act as preferential area, and the origin of goods shall be determined in accordance with the rules. A country of origin certificate should be produced. Okay. So then in that case, so they will be eligible for the preferential rate. So how to determine the origin? So if the goods are unmanufactured, it should be grown or produced in that area. If it is fully manufactured in that country, it should be manufactured from material produced or with unmanufactured materials from that country. If it is partially manufactured in that country, final process should be completed in that country. Then only the goods country of origin will be applicable. So, if you are importing it in unmanufactured form, it should be grown or cultivated or produced there. Suppose if you are purchasing the goods which are fully manufactured there, even the raw material should be produced or grown out of there. And suppose if it is partially manufactured in other country and partially manufactured in that preferential country, the final process should have been complete in that preferential country. So then only this preferential rate will be applicable. Okay. Then next, question number 5. Write a short note on emergency power to impose or enhance import duties under section 8A of Customs Tariff Act. So central government has power to enhance or levy, so the impose or enhance customs duties on import, but whenever they are enhancing, they need to enhance the goods which are covered under first schedule, and it is necessary that they wanted to do so. Okay, so then they can increase this. So section 8A provides that where central government is satisfied that the basic customs duty should be increased and the circumstances exist which will render it necessary to take action, it may by notification amend the first schedule, because first schedule contains imports. So to increase the import duty or to levy the import duty to such extent as it thinks necessary. Okay. Then question number 6. Determine the customs duty payable under Customs Tariff Act 1975, including the safeguard duty of 30% under section 8B of the said act, with the following details available on hand. So safeguard duty is usually a percentage, but that percentage is computed on what? That percentage is computed on assessable value or landed value. Now, what is the landed value? Assessable value plus basic customs duty plus social welfare surcharge. So check the question whether it is given anywhere that it should be levied on assessable value or landed value like that. So determine the customs duty payable, including the safeguard duty of 30% under section 8B. Nowhere they have given that on what it will be levied. Means I told you that we need to take it on the assessable value. So when in the absence of information, we need to take assessable value. What is assessable value? 30 lakhs. So on 30 lakhs, we need to compute 30%. So that will be 9 lakhs. So first assessable value 30 lakhs. Basic customs duty 10%. So therefore 30 lakhs into 10%, 3 lakhs. And social welfare surcharge 30,000, 3 lakh 30,000. Now we need to do this safeguard duty, that is 9 lakhs. 9 lakhs will be safeguard duty, should be computed on assessable value. Then while computing IGST, 3 lakh 30,000 plus 9 lakhs, so that is 12 lakh 30,000 plus assessable value 30 lakhs. So therefore on that we will compute. So 30 lakhs plus 3 lakh 30,000 plus 9 lakhs. On that we need to compute IGST 42 lakh 30. We need to compute IGST 12%, that is 5 lakh 7,600. So you can see that 30 lakhs, 3 lakhs will be basic customs duty, social welfare surcharge 30,000, safeguard duty will be 9,000. So integrated tax 5 lakh 7,600, and this is the total customs duty payable. Okay. And when there will be no safeguard duty, if we are importing from a developing country, so imported from a developing country, but see the percentage. So share of import of sodium nitrate from developing country against total import of sodium nitrate to India is 4. So we will not get any relaxation. When we will get relaxation or exemption from safeguard duty, if imports from a developing country does not exceed 3% of the total import of that article into India, then there won't be any safeguard duty on that article. Okay. But here safeguard duty is applicable. Then question number 7. Differentiate between protective duty and safeguard duty. Protective duty is levied by central government on the recommendations of Tariff Commission, but safeguard duty levied by central government based on investigation. Protective duty is enhancement of basic customs duty, but safeguard duty is an additional duty that will be levied, and investigation not required in case of protective duty, investigation required in case of safeguard duty. There is no provisional protective duty, but there is provisional safeguard duty for a period of 200 days, and then there is protective duty applicable in all cases once levied, but safeguard duty not applicable in few cases. So that is imports by 100% EOE or SEZ, like that. So the differentiation between protective duty and safeguard duty we need to write. Okay. Then period. There is no period for protective duty, but in case of safeguard duty 4 years, it can be extended for a further period of 6 years. Okay. These are the differentiating points. Briefly examine the nature and significance of levy of anti-dumping duty under Customs Tariff Act. It's a theory question. We need to write completely about anti-dumping duty, when there will be anti-dumping duty as per section 9A, and how much is the anti-dumping duty, when anti-dumping duty is not applicable, like that theoretical part we need to write. Then Chain Top Industries has challenged the imposition of anti-dumping duty retrospectively on the grounds that it is unconstitutional. Explain whether it would succeed in its contention. No. Anti-dumping duty and countervailing duty, that is anti-subsidy duty under section 9, can be levied retrospectively within 90 days prior. So today they can give a notification for a retrospective levy within 90 days prior, they can do that. Okay, that is valid. So retrospective effect they can do, so within a period of 90 days from the date of notification. Okay. Then next question number 10, determine the total duties payable under Customs Act if Mr. Rao imported rubber from Malaysia at a landed price of 25 lakhs. It has been notified by central government that share of imports of rubber from developing country against total imports to India exceeds 5%. Safeguard duty on this product is 30%, IGST 12%, BCD 10%. Ignore agriculture infrastructure development cess. First, what will be taken as the value? 25 lakhs. 25 lakhs will be taken as the value. Basic customs duty will be 12% or 10%. So therefore, we will be taking 25 lakhs. Basic customs duty 2,50,000. And social welfare surcharge 10% of 2,50,000, 25. And what is the safeguard duty? 30%. Again they did not give anything, means it will be computed on assessable value. What is the assessable value? 25 lakhs. 25 lakhs into 13%, 7,50,000. Okay. And while computing integrated tax, we need to take basic customs duty, social welfare surcharge and safeguard duty. On that we need to compute integrated tax, that is 4,23,000. So 14,48,000 will be taken as the total customs duties payable. Then question number 11. During the year 2021, the customs authorities have noticed that there is an increased quantity of product XYZ being imported into the country. Determine whether central government should consider levying safeguard duty or anti-dumping duty. When goods are being imported in large quantities and that causes serious injury to the domestic industry, then safeguard duty shall be levied under section 8B, but not anti-dumping duty. And enumerate any exemptions. So we have already discussed that question. Exemptions 100% EOU, SEZ, import from a developing country does not exceed 3%, more than one developing country. So those 5 points. Also central government may specifically mention in the notification about non-applicability of safeguard duty for import from a particular country, like that. Okay. So this is about safeguard duty related provision. Okay. So that we need to write. So with this, all the questions in chapter number 2 is over.